This is a major liquidity withdrawal from financial markets, suggesting that overall stocks have significant downside potential from their current prices.
Hi, I'm in the Bahamas at a conference called The Collective. I highly recommend you checking it out. This is one of the best conferences that I have ever been to. And my presentation was about the scale of the real estate bubble that's happening right now. It is, I'm speaking to a bunch of real estate investors and trying to convince them that they should probably consider some insurance, and that insurance is gold and silver. But it isn't just the real estate bubble, it's the stock market bubble and the bond bubble. The scale of what is happening against this backdrop of all the geopolitical tensions that are going on, the wars, and then the banking sector being on such unstable ground. We're at a very critical moment in history, and I do think that this is not going to end well for most people. I was explaining to everybody in the crowd how the 2008 financial crisis was one of the best things that ever happened to me financially. But I really do worry about the economy and the common guy. So many people lost everything in that global financial crisis of 2008. And so if you're in one of the sectors that is in a bubble, you really do need to consider some sort of insurance. And then, if you can join a group like this group, The Collective, this is some pretty high power people here, and they got some really good information, and they're enjoying themselves in the Bahamas. So I can't be at the weekly wrap-up, and I'm going to turn that over to Alan Hibbard, who's going to let you know what went on this week. We'll see you next time.
Hey, Gold Silver family, I'm back for another weekly wrap. I've got some exciting things to show you, and it starts with the number of the week. So first of all, we have 211 trillion with a T, thousand, million, billion, trillion, 211 trillion. What is this number? It's a number of dollars, and it is the number of unfunded liabilities of the US government. $211 trillion in unfunded liabilities. How are we going to pay for all that? I have no idea. That's over $600,000 per citizen. $600,000, and we have no way to pay for it. So eventually we pay for it either in the form of taxes or inflation. So we shall see. The headline of the week: former ECB president Mario Draghi discusses the death of the Eurozone. The death of the Eurozone. That sounds dramatic. In this article, he talks about how it doesn't really make sense for all these different countries, 28 of them, to have the same interest rate. It's really hard for them to negotiate trade deals. It's just really hard for so many diverse players to agree on one course of action. So I encourage you to check that out. You can find that article and many more at the goldsilver.com website. Over here on the right side, former ECB chief Mario Draghi discusses the end of the Eurozone. And there's plenty of other good articles here too. U.S. money supply is contracting, something not seen since the Great Depression. In that article, you'll find something is happening that hasn't happened in 90 years. It's a big deal. Check it out. There's also the imminent bankruptcy of the U.S. government, casual. And these are long-term trends. There's also some short-term things happening. Let me see here. Retail investors pull most cash from U.S. stocks in 2 years. So retail investors pulling money out of stocks. Hold that thought. Wall Street bankers are selling their stock following JP Morgan's CEO's lead. Okay, so we have Wall Street bankers selling stocks, retail investors selling stocks, and that leads us to the tweet of the week.
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, GoldSilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making GoldSilver.com your dealer, and now back to the video.
Which is central banks selling stocks. So over here, this comes from Tavi Costa. He says, global central bank assets have already declined by almost $6 trillion from peak levels. This is a major liquidity withdrawal from financial markets, suggesting that overall stocks have significant downside potential from their current prices. Okay, so putting that all together, we have retail investors, we have Wall Street bankers, and global central banks pulling out of equity markets, all in the very recent past, in the present, actually. So what does this mean? Well, look at this chart from Tavi. This goes back to the 2008 financial crisis. We can see that global central bank assets are correlated very strongly with the S&P 500, and it has been up and down, okay, bull and bear markets. And all of a sudden, we have this divergence where the red line is separating from the white line. Does that mean that the white line is going to catch up to the red line? If so, that would mean that the S&P 500 drops sharply in the very near future. Is it going to happen? I'm not sure. So I know we just talked about some short-term things happening in the equity markets and how sometimes the government, whether it's in the United States or Europe or globally, affects what we do as investors, right? The government decisions affect what we do as investors. And this week is special because it is election week. Now, it's not a presidential election, it's an off-cycle year. But we are now within 1 year of the next presidential election, the election of 2024. And because it was an election this week, I thought, I wonder if there's a correlation between the presidential election and the price of gold, right? Is there any data in the long term that would suggest some kind of relationship? So I got to work and I made this chart. And this is the price of gold since it became freely traded, 1971. And you can see throughout the bull market of the 70s, we had a Republican president in red and then a Democratic president in blue. And you can see the vertical dotted lines here is election day every 4 years. And what do we notice? What is the pattern between the elections and the price of gold? Well, if you see what I see, there is no pattern. There is no pattern. And that's actually a really good thing because I don't want the prices of my investments to be affected by political decisions. And my analysis reassures me that gold is a great investment regardless of which political party is in the White House. That's my big takeaway. If you want to read more about this, including a further analysis of elections and gold, I encourage you to check out the GoldSilver newsletter back on the website. You just scroll down, sign up for the newsletter, and the nuggets from this week includes that chart and a much deeper analysis. Finally, I want to end with the meme of the week from Hayek. Not that Hayek, the other Hayek, the economist Hayek. The quote from Hayek: "I do not think it is an exaggeration to say history is largely a history of inflation. Usually inflation's engineered by governments for the gain of governments." I don't know about you, but I could look at this meme all day. I mean, who doesn't like a nice set of economic principles? Thanks for watching, everybody. See you next week.
Hi, I just wanted to tell you about GoldSilver's 111-ounce silver giveaway where you can win 111. One 1-ounce silver bar, one 10-ounce silver bar, and one 100-ounce silver bar. So enter today and win.